What's going on, everybody? Welcome back to the channel. Thanks for tuning in with me today. I'm going to go over my trade from this morning and basically just reiterate the strategy that I've been going over the last couple weeks and what's been really working for me. Basically trading puts on the SPY or calls depending on where the momentum is. So basically just trying to follow the trends on the SPY, and I find this to be a really effective strategy. It really works, and it because you're not trying to get these huge moves, like really, like even if the SPY only moves like 50 cents to $1, I can still get a huge gain on the options. So it's kind of like one of those things where it's easier to get these bigger kind of profits trading options than it is trading stocks, because you need such big moves in the stocks and you can't always predict that, but it's easier to predict smaller kind of short-term moves, right? So you'll kind of get an example of that today when I traded. Like I'll show you my entry and what I was thinking when I traded it, right? So I think it was a 380 put, I think. Is it the 380 put? Might have been the 381 put. Yeah, so the 381 put was what I traded today. And it was the put that expires tomorrow. So just in case anybody like cares, like the one reason why I do this, so I trade the put that's tomorrow instead of the one that's today, because it's a little more expensive. So you can see down here it was trading at like $1.50, where the other one was at $2.50. So it's cheaper for me to get two contracts at a higher price. So the next day the price is still higher. It still was at 225 or something when I bought this. So that allowed me to kind of get a better entry and not have to pay more money, right? Because the cheaper the contract, the less money you're putting in. So if it's only like a $1.50 contract, I might have to get 3 contracts to get the same gains that I can get from this contract, which is why I choose to either pick a later day. Like I don't mind trading the options that expire today. So you can trade the put options that expire on the 22nd, which is today, but I prefer to trade the ones that expire tomorrow because they're a little more expensive. And that means that I only have to take 2 contracts rather than having to buy 3 or 4 contracts, which is more expensive, right? So this and when I say expensive, I mean with commissions. Sorry, my webcam fell there. The commissions are just more when you're trading more contracts, right? But now you can obviously make more money, but that's just what I'm comfortable with right now is 2 contracts at around $2.50, and that way it kind of gives me a good level of like putting about $500 into the trade. It gives me a good confidence level in the trade. It's not too much, it's not too little. It kind of gives me the perfect opportunity to make money and not sweat too much about it, although it is pretty stressful. Anyway, let's talk about the trade. So the trade today was the same as it's been the last couple weeks. When I tell you guys that I'm just looking to follow the trend, I'm looking to see some sort of movement in the SPY that shows me. So today at 10 o'clock, you got some bad consumer reports. I think something came out. I don't know if it was consumer sentiment. Something came out and it was negative. It doesn't really matter to me. All that matters is the price action, the volume, and the trend. So the trend was already going to the downside before this data came out. It looked like we were going to get a little bit of a bounce here. I thought about maybe trying to take an option in here, but I just didn't like the price action, and I thought maybe we'd get a bounce, because I don't really like trading before 10 o'clock, to be honest with you. When you're trading the SPY, I find that especially if you have like an announcement coming out right at 10 o'clock, you don't want to be in a contract just to have the SPY rip against you, right? So you need to be more cautious and take these contracts kind of at times when you're going to have less volatility and a better chance at, catching the trend in the right direction and not getting whipped out right at that 10. So if you buy here, oh, like this is going to rip up. Like you see this, it looks like, oh, you're going to get a nice higher move, starting to hold these lows. We've been waiting for a Santa Claus rally, so maybe everybody's like, you know what, this thing's going to rip up. We're going to have a huge green day. These numbers are going to be great. So they buy here anticipating, and then before they know it, they're down $1 on their contracts, more $1.50 on their contracts, which is terrible, right? That's like $150, $200, right? Bam, gone within one candle. So you got to be more willing to wait for a better opportunity when you have less volatility, or less chance of volatility, I should say, and more chance of a directional trend. So that's kind of what I did here. You can see this 1007 was when I entered this contract. And I traded it probably, I held for a little too long because we got the move that I wanted. I was even saying, I'm going to hold till 3, and then it hit 3 and I didn't sell because I was like, well, maybe it'll break 3 and keep going because it looks so strong. And then it reversed on me, came all the way back down, and very quickly, I had to take my profits. So I was in at 226 on these contracts, 2 contracts at 226. First contract sold at 251, just realizing that was a level of big resistance, and that we really needed to break that 251 or it was going to just be a negative trade, and I didn't initially want to take a loss. So I like to take profits in that range, knowing that if it comes back down to my entry, I can get out and basically make enough on the commissions that it makes it a flat trade. So that's my thought process there, why I take my profits. Yeah, I could have hold both contracts, hold them at 3 and been up $150. Bam. Great day. It would have been an amazing day. Even if I sold the one contract that I had up at $3, it still would have been like, $90 day, $100 day. Still was a pretty decent day. I made like $60, $70 off this trade, which is fine. It's just like, at the time it seemed like it wanted to break, and I didn't think we were going to get this hard rejection, but it's so obvious that it was going to happen, right? So you had these big red candles, this huge volume, and then in 2 candles it just rips right back up, and then within 5 minutes you're back up basically to my entry, close to my entry, right? So, and it never came back down below 250, but it really just, you don't know how it's going to go. And when you have these big candles in both directions, you don't want to be holding like in a candle like that when it pushes to the upside and breaks the downtrend. It can just kill you, right? So I ended up getting out at probably a bad spot, but it ended up going way back to 250. So instead of like having to sell back here, I sold it up at 267, and I sold it like it was going down so fast. So it was like 275, I think, when I sold it, but it broke and ended up giving me 267 because I just marketed it out, wanting to get like the quickest outfill I could because I knew I was up still substantially on the contract. Obviously, I lost 33 cents from the top, which would have been a nice extra $40, win there, but either way, it was a good trade, and it just kind of proves that in the past 2 weeks, I've basically traded the SPY every day, and I've been green every day but one, and that was this Monday, right? So Monday, I was probably looking at like a $30, $40 loss, because it just didn't do what I want, right? I bought at a support level, and it ended up just breaking down immediately, so I got out, and it broke down even more. So like, these can happen. You can have this move that looks like it's giving you this really good downtrend, right? Oh, look at this selling, that's insane, and then it just rips right back up, and it's way up here before you even have a second to think about it. That's how they trick you. That's how they frustrate you. That's the whole point of the market, is to make you think one thing's going to happen and then do something completely different. Although the last couple weeks it's been a lot of selling, so I've been buying a lot of put contracts. That's pretty much every day I've been making money on the put side. And you can kind of see the momentum and see the volume, and you can determine your trade based on that. So, like I said, wait till after 10, look for these momentum trades, look for the kind of consolidation or the momentum in the markets, and then take the trade. Yesterday, it was a long, so yesterday was one of those days where you realize you could have made like probably thousands of dollars, or like at least hundreds of dollars, if you would have followed your instincts. I wanted to buy around here, but I really hesitated because it was so strong, and I thought maybe it was going to pull back. So I didn't end up buying, and it just ended up going up and up and up and up and gave you no opportunity to get in, really. So what I ended up doing was taking a trade, and I think this was literally right at the top here. So I bought, I think, this pullback, and in the bottom of this candle, this 386.50, I bought looking for a move upwards, and it gave me that move upwards, and then I sold, but then it basically was a small winner. It was basically the same thing that happened today, right? I held a little bit hoping for a move higher. It came back on me, so I covered for like a $40, $50 win. when it should have been a lot more. Or sorry, when really that was the most I was going to get. If I would have sold both contracts at the top, it would have been like a $60, $70 win like it was today. Sometimes you got to try and hold for those bigger moves, but when you don't get them, that's the good thing about options, is you'll know very quickly if you're going to get those moves, and if not, then you just got to get out with your profits and be happy with them, right? So I guess overall, this strategy is very effective when you follow the rules. And that's just always with the trading, is have a plan, follow your rules, look for momentum, look for volume, and then look for a pullback into some sort of resistance or support level that you can hope to, get into a contract, whether it's a put or a call, right? So like I said, yesterday it was a call, today it was a put. Both made me $50, $60. Both should have made me like $100 if I would have just sold them at the top of the move instead of holding for a bigger move. But like I said, if you would have bought contracts, if I would have bought this initial contract down here and held that all the way up to here, it would have been a monster move, right? This is why you don't necessarily want to take profits when you get those first profit targets. You take one contract off, you hold the other one in case you get a rip, right? And if you don't, then you sell and you take a decent day. All right. Well, that's it, guys. Thanks for watching. I had another trade today on some shitty other stock that ended up doing exactly what I thought I was going to do about 5 minutes after I tried to get in on it. So I'll tell you guys about that real quick. Kind of drove me nuts because, to be honest with you, I really thought this thing was going to hold up. It was going to hold 450, and then it immediately ripped down on me, and I got out only for it to do exactly what I thought it was going to do. Come back and hold 450 and then rip up. And this was just looking at this downtrend, knowing that 450 was a huge level of support in the pre-market, and hopefully it was going to come back up and hold that level. So it wicked me out, but if I would have stayed in the trade for another 30-40 seconds, I probably would have had a huge winner. Been up, $70 on the day, easy. Unfortunately, that didn't happen, but yeah, that was the trade there, and unfortunately, it was a loser. But the idea was right, and it's just funny when you see this that it did exactly what I thought it was going to do. It just whipped, in that one candle, was able to wick me out, unfortunately. Anyways, that's it for today, guys. Thanks for watching the channel, and hopefully you come back for some more videos on some SPY puts and some day trading action. Bye-bye.